So I believe I'm up first. So my name again is Kathy Cowan-Becker. I'm the Responsible Finance Campaign Director with Green America. Just before we get started, I'm going to let you know a little bit about Green America. We're a leading nonprofit organization dedicated to creating a socially just and environmentally sustainable society. We operate on the belief that individual actions, when multiplied, can drive significant societal change. Our theory of change is rooted in empowering individuals and businesses to make conscious choices that prioritize people and planet. So we have a number of innovative campaigns, advocacy efforts, educational programs, and we strive to inspire and equip people with the knowledge and tools needed to effect positive change in their communities and beyond. We advocate for fair labor practices, promote renewable energy solutions, and as in tonight, help people align their money with their values. We're committed to addressing the most pressing societal and environmental challenges of our time. So tonight we'll explore responsible investing, what it is, how it works, and how you can do it, and delve into practical solutions that build a more sustainable future for all. Together, let's harness the power of creative action to create a world where people and nature thrive in harmony. So now I'd like to introduce the facilitator of this webinar, Reverend Amy Brooks Paradise, who's the North America organizer for the global environmental nonprofit GreenFaith. Amy is a UU minister working on climate finance with GreenFaith and GreenFaith Circle Development. And I've had the honor of working with her on a fuller curriculum for aligning your money with your values in banking, credit cards, insurance, and investing. And a lot of the investing that you'll hear tonight is in that investing unit of that webinar or of that curriculum. So welcome, Amy.
Thank you so much, Kathy. It's great to be here with all of you. Welcome to everyone. And it's surely my pleasure and honor to be a part of this webinar series. I'm going to start by inviting my colleague, William Morris, to join with me as we kind of ground this conversation. William is also a faith organizer with GreenFaith, and he's also chair of the Young Evangelicals for Climate Action. William has been dedicated to being an environmental advocate, and he holds a degree in environmental science with an emphasis on ecological restoration from Humboldt State University. And he's really also passionate about sustainable investing. And so I want to welcome you here, William, together with this group. Hello.
Hi, Amy. Thanks so much for the gracious introduction. So glad to be here with you all tonight.
Thank you so much. So, people want to align their money with their values. That's why they're here this evening. And we all have beliefs that we hold about what money should do and be for us. And so I wanted to kind of open up the conversation to be thinking about what are our values, and maybe particularly for us as people of faith, what our faith values are. And I wonder what specifically you think that people of faith bring to this conversation of socially responsible investing. Anyone can socially invest responsibly, but as people of faith, we really are grounded in some values that I know that's really important to me. So I wondered if you share a little bit about that from your perspective.
Yeah, absolutely. Thanks, Amy. That's a great question. I think as a person of faith and thinking about people who make decisions based off of their morals and values, this is a great place to be in this conversation as we talk about money. So often we don't think about where our money goes and what it's doing, and like it kind of goes out of our sight, or it's numbers on a screen, and we don't think about the morality behind our money many times. And so I think different faith traditions can really help us with that. There are so many stories in my own faith tradition. For example, in Christianity, the Bible has a ton of parables on money and using that money responsibly and using it for good. If you do a quick Google search, there's actually over 2,000 verses in the Bible about money, which is about 4 times as many as there are about faith and prayer and these different things. And that doesn't mean that these are any separate or more important, but in fact, it means that how we use our money is an extension of our faith and our prayer. And so I think it gives us really good stories to tell. In fact, I can think of some stories where in the Bible there are people who are rich and trying to give to the temple, and some of the followers of Jesus see an old widow give a couple of pennies and they praise her and say, this person has given more than the rest of everyone else has given. And oftentimes in church, that's used as a like, no matter what your situation you're in, you should give money. But I think it points more to no matter the amount of money we have, we're called to use it responsibly and in a good way. And so I think that all faith traditions have these different corresponding values around money, being responsible, and stewarding what we have well in a way that is helping people and planet and not hurting.
Yeah, as you were talking, I was thinking about that really resonates for me as a person of faith, but let's open up the conversation. Some people may not consider themselves people of faith, and yet we know that it's very important for folks to think about how they spend their money. And most people want to do good. And we seem to be in a situation now where a lot of folks are spending money on things that are hurting the planet. And that's what the focus of this whole seminar is. How do we do a better job of using our money for good? And so I wondered if we could open up the picture a little bit wider and talk about, what is the moral responsibility of us as, people, whether we're of faith or not. How did we get here, and what are we trying to do in terms of helping people think more clearly about what they do with their money and giving them the tools to do that? And maybe specifically, what's been your own experience with how money's being invested? How has it been helpful, or how has it been hurtful from your own personal story? What are some of the things that you've been seeing?
Absolutely. That's a great question, Amy. I think I see a lot of the endpoints of that invested money. I live in Southern California. And so I live down the street from a refinery. In fact, within less than 10 miles of me, there's about 6 refineries. There is neighborhood oil drilling that happens. And Los Angeles is, in fact, home to the largest urban oil field in the country. So within the city limits, there's a lot of oil drilling. And so this is the kind of place that these investments go. They go into harming communities and making it so the air isn't clean to breathe, the water's not clean to drink, it's not safe to go outdoors. I can remember so many times growing up as a child that we'd have to shelter in place and run inside during the school day because toxic gas would escape from the refinery. And so having to grow up under what we thought was normal and later found out was not, I think was really frustrating to learn that it doesn't have to be this way, that these were decisions that were made. And as I see fossil fuel rollouts across the country now, my heart really goes out to these communities, whether it be LNG buildouts in the Gulf, whether it be the Mountain Valley Pipeline along the East Coast. This pattern of harm continues to this day. And unfortunately, it's people's invested money that's being used to fund these projects and to harm these communities. And so I think I've really seen the part where my community suffers, my friends, my family, people I know suffer from the end point of where this money goes. And I think the other thing I've seen is folks who don't live near things like I do. Not everyone lives near a pipeline or a refinery, but everyone has some sort of connection to money. But oftentimes when they think about investments, it's numbers on a screen or numbers in a spreadsheet, and it's not connecting to these points on the ground. And so I really think it's important to hear from people who are experiencing what's going on and realizing like, oh, the actions I take and where my money goes really does make a difference. It's not just these numbers on a screen. It has an endpoint. And so as we think about whatever actions we take, I love what Jacqueline has put in the chat, that I'm a person of love, not religion. And so thinking about how can all of our actions be used in love? How can our money be used in a more loving way?
Yeah, that's really powerful. And I love hearing about the stories because I think it's so important to make the connections. Here in Charlotte, where I live, there's a lot of banking that goes on, and people have no idea what these banks are investing in down in the Gulf South, for example, or even further south in the global South. And being able to tell those individual stories and make those connections can really help mobilize people to want to make the changes. And that's why we're all here tonight. One other thing I thought about to kind of set the stage for us this evening is that, we probably have a fairly intergenerational group here, but often when we think about investing in particular, it's older people who've been able to, accumulate some wealth over time. And I'm just curious, you as a young person, I know you're passionate about responsible investing. So I'm just curious, as a young person, what are some of the things that you're hoping for, that you're hoping people will do, actions people will take? Because it's your future, right? I mean, it's your future. Some of us are a little bit further along, but you have your whole life ahead of you. And so I'm curious what you're hearing from people in your age group.
Yeah, thanks, Amy. That's a great question. I think what's wonderful about young people is that they vote with their values and morals already. This is something that is inherently happening. And so many times you can see examples of this where young people are boycotting, a certain company or organization or different things that they learn, this place is harming people or this place is doing things that don't align with the values we have. And they don't want to financially support them. They don't want to buy food from them or, go to their stores or different things like that. And so I think in this new age of social media where information is more easily available to young people, they really take this idea of being responsible with what we have and run with it. But I think the problem is, as you said, young people don't have a terrible amount of money. A lot of that hasn't made its way down generationally. And so I think young people really are thinking about how can I use this money? How can I use it well? And so I think that's what's wonderful about intergenerational spaces like this, where there are older folks who really care and are part of this movement and care about young people and their future. How can we work together to listen to younger folks who are, really done the homework on these companies and where the money is going? You'll hear from some experts later on the more technical side of this, but really listening to younger folks and activists who are saying, you know what, these banks, these asset managers, these companies, they're the ones who are hurting us. And so how can older folks really be in solidarity with younger folks when it comes to using the resources, the money, the things they've acquired over their lifetime and steward well to use them in a way that's going to build a better world instead of continue to destroy, like oftentimes we have seen.
Thank you so much, William. I'm afraid we're just about out of time, but I just love the points again, telling stories, hearing people's stories, especially those folks on the front lines. Everybody has some relationship to money, so it's great that we're here to pay attention to that. Whether we're a person of faith or spirit, we all want to use our money and our power, our agency for good. And we really want to make sure that we are in solidarity with our frontline communities and our future generations. So thank you for all of those points, William. Yes, William. And I'm reading the name on the screen that I have to say next. I want to move on now. And I know you're going to stay on and be part of our conversation later on. And people are already starting to drop great questions in the chat, and we will get to those. But I want to move us next to our next two panelists, who are going to really get into the nuts and bolts of how we do responsible investing. And first we have with us Michael Young, who is Director of Education and Outreach for US SIF. SIF is the Sustainable Investment Forum. He has 3 decades of financial services expertise. He leads education initiatives, including the U.S. SIF courses and training services, and develops educational materials on sustainable investing. So welcome to you, Michael.
Thanks for having me. Happy to be here. And great questions I see coming in.
I know, right? We are going to get to those. So keep them coming. Our second panelist for this evening is Todd Larson, who is the executive director of Green America, where he directs corporate responsibility and consumer engagement programs. These programs educate consumers about the environmental and social records of major companies and how they can use their own investing to create a more just and sustainable world. So welcome to you, Todd.
Thank you. I look forward to talking soon. Back to Mike.
Yeah. So I'm going to turn over this time to the two of you, because you're going to take us through a program. We'll be doing this for about half an hour, and then we're going to have some time for Q&A. So gentlemen, take it away.
All right. Sounds good. Thanks again. Again, my name's Michael Young. Real quickly, here's what Todd and I will be breaking down together. I'll handle the first portion of the slides. Keep those questions coming in, and we'll try to address them as we go, but we may have to save some towards the end. The first thing we'll talk about is in broad brushstrokes, what is socially responsible investing? How has it evolved over the past 30 years? And making sure that you understand the acronym ESG. You might have seen it in the news over the past few years, and then certainly over the past 12 months and change, it has been attacked. I saw a great question from David about GOP backlash. And then I'll hand over, after some of the big picture, to Todd, who will cover real specifics and show you some resources that'll take you directly to answers to some of the questions that I've seen in here. So let's jump to the next slide. We should start with a disclaimer. While I have a long time in financial services, and as was mentioned earlier, some of us have less time on the planet left than others, but neither Todd nor I are investment advisors in our current roles. So what we're covering today is to give you the broad landscape, to find out where you can go for resources. But we're not, if we mention any specific indices or companies, we're not saying they're the best places to invest, but we want to make sure you're aware of them. You can do your own work or work with a financial professional that might be in your life. And so with that, let's jump to the next slide. Okay, so let's talk about what it is. So obviously, we have quite a few people that logged in. You must have some familiarity, and clearly there some of the questions indicate some expertise in the audience. But for those that don't really know what it is, what we called socially responsible investing back to the 80s started to evolve in taxonomy. And in the last 20 years or so, you've seen it called responsible investing without the word social in front. I find that happens more often than not for people that live in Commonwealth countries, so Canada, the UK, Australia, et cetera. And here in the United States, we've seen the word sustainable start to become a more popular way to describe the whole space, in addition to SRI. So you might see sustainable investing. It's important to know you'll see some people call it ESG investing. Some people will call it ethical investing. There are religious-based investors, of course, who may call it values-based investing or biblical investing. You'll see impact investing. The point of all of it is, while they are not necessarily interchangeable, they're often used interchangeably. So you're probably not wrong if you use your favorite description. And what it really is no matter what sort of approach you're using, whether you're buying individual companies or you're buying funds and you're trusting a fund manager to have a set plan, or you're looking at potentially how you bank with people. I know there will be future webinars on this. But we're considering environmental outcomes, social outcomes, corporate governance. In all of those three areas, there are impacts both on the company itself and its employees, and also the community around it. And then the way you can approach it, as I said, is almost any way now, which has really changed in an exciting way over the past 15 and 20 years. It wasn't easy to do this in the 80s. There were approaches for sure, but there's never been more, which is really exciting for everybody here that's looking to change how they invest. So let's go to the next slide. Why should we do this? Well, this is really important. There are, if you consider US GDP, so much of what is happening in the planet related to emissions and pollution, clean water, agriculture, is impacted by how corporations are either choosing to be responsible or more responsible, or hopefully not being intentionally bad actors, but they could be bad actors. And so what SRI has done for us, what sustainable investing allows us to do, even as individuals, is push companies to consider ways to do a better job about making their companies more diverse. If you follow Mark Cuban on any social media, he has done an incredible job of explaining DEI and why all the companies that he has ever run, he finds it's really important to have diversity both in gender and race at his leadership positions, from every portion of his company, including his board. And I think we can put pressure as individual investors, either collectively through mutual funds or as individual shareholders that own stocks, on these companies to put a focus on these potential areas to improve the communities around them and how they operate, so that their long-term effects on the planet are at the very least less bad than they could be. So let's jump to the next slide because I feel like we can illustrate this better by describing what ESG is here. But really quickly, there's a question of, is responsible investing popular? And it really is. And this chart illustrates from 1995 through to 2020, the original version of this study, the growth in the field, how many people have started to take into account possibilities for socially responsible investing. And as you can see, in the early days, there weren't that many, but now about $1 in $8 are invested either through individuals or institutions or pensions, like if you live in California, CalSTRS or CalPERS, or in New York, the New York State Teachers Pension. All of them are now enacting some form of sustainable investment, which is definitely a positive trend. If you're wondering about the tail end of this chart, we made it harder to be counted at USIF. So if you didn't explain exactly what you were doing to integrate ESRG data into your process, we didn't count your money anymore. And there were some large insurance companies that were claiming to integrate ESG, but weren't putting all that much in. So you can dive into this. It's free on the USIF website if you'd like. But this was covered earlier by William, but I think this is really interesting. Are people into this? Is it popular? Is it popular in the US? Is it popular across demographics? And the short answer is it sure is. And in fact, even in the United States, while we are behind the world in some cases because of our internal politics, our interest by individuals still leads the world in people that do have interest in being more responsible and managing how their dollars go. So I think this should make us all feel proud, but clearly there's a long way to go. We've got some people that don't agree with us or don't agree with us at all or actively work against us, but there's more of us than them. So we're on the right trend. Let's jump to the next slide. So I think this is the fun part, and Todd will get into how funds might use this or how you might look at companies, but let's just start with what is ESG. So I mentioned the environmental, the social, and the governance piece of it. This wheel on the screen is definitely not comprehensive, but it does show you some examples of where things would fall as you're considering how a company operates. And so, if you're a technology company, we're probably not so concerned about their water use and conservation or their pollution and toxins, at least in the initial part of it. I will say some tech companies, chip companies, if they require extraction, both of those things are going to matter. So we would have to look into those for supply chain. But you can see across the board here in the blue section for social, this is really important. This includes labor relations, workplace safety, which is a really big thing, benefits, human rights. How do they treat the community that they're in, whether, no matter what kind of company it is, there's some impact on how they negotiate for factory space and tax cuts and what do tax cuts mean or tax abatements. Do they offer benefits and time off? And when they don't, what happens? And we've seen some pretty tough examples, both recently and going back to the beginning of capitalism. So I think if you're not familiar with this wheel, let's jump to the next slide. It's a little bit easier to read this next one. First of all, the font's bigger, which is great for my terrible eyes, but also we can dive into a little bit about like, what does it mean? So if we're talking to a company or thinking about how a corporation operates, and we want to think about, okay, specifically environmental issues and data points, we want to consider a bunch of things, but it really boils down to how is this company managing environmental liability, and is it doing a good job? Or is it trying at all to find ways to address environmental issues? And so this is hugely important for any company, particularly in the environment we're in today, where climate change feels like it's accelerating. Our winters are shorter. We have power grid failures, both cold and warm, in states like Texas that lead us actually in both fossil fuels and renewable energy. So it's critical that they start to get this stuff right. Social. How is the company going to treat its stakeholders? And that's all stakeholders, right? So I feel like if you want to think about how this is important, let me talk about, because this will tie into E and S issues, a couple of disasters that you might remember. So In 2010, it was terrible, but not far from where I live in Pittsburgh, we had the Massey coal mine disaster. So there was a terrible history of workplace safety, no effort by leadership to address it or make sure that they were keeping employees safe. And the community was devastated by not only loss of life and ultimately the mine getting shut down. Well, the CEO there did go to prison for it, but that didn't make up for all the people that died and the families that were negatively impacted. But as an investor, you knew that they had bad workplace safety scores, and mutual fund companies and institutional investors were engaging them and telling them, hey, you're not keeping up with your peers. And the only way you can do that is actually to own the company. So there are some folks who will choose to own no fossil fuels. There are other socially responsible investors who do choose to own them so that they can go to the annual meeting and say, hey, you're not keeping up. If there must be fossil fuel companies, at the very least, you could be amongst the best, right? Another disaster just months later was Deepwater Horizon. So another workplace safety failure and terrible workplace benefits. That was BP hiring a third party for an oil rig. We all saw what happened to that and the long-term impacts. The stock price fell in half after the disaster and still hadn't regained its price point more than 10 years later. And again, that was something that not only did that have huge negative E scores and outcomes, right? Pollution, a long-term impact on water and agriculture in the Gulf. But we lost lives again. Workplace safety was terrible. And this was information available to investors. So there were mutual fund companies who knew BP was scoring worse than the other fossil fuel companies, trying to engage them, trying to tell them they have to spend money on this because if they didn't, they would negatively impact communities that they were doing business in. Sure enough, that happened. Terribly sad. And then, I'll just mention this because it happened not so far from where I live now. We also saw the train derailment and the huge ecological, environmental disaster that has happened in Eastern Ohio. Again, this was about workplace benefits, no time off, terrible workplace safety, low expectations for the chances that the employees, that even if they cared, to be able to uncover risk. And again, professional investors were able to uncover some of these risks. And in many of these cases I just mentioned, they were able to avoid owning these companies, not because they were necessarily just getting rid of fossil fuels, but because amongst the fossil fuel companies, these firms were doing a terrible job. And so it is possible with information, with ESG data, to uncover risk and to find ways to improve a company. And you'll see that many socially responsible investors, if they're institutions and professionals, they'll go to companies and say, hey, we uncovered some problems, or we uncovered some areas where you could get better. And the company will say, thank you, this is really great. So it is possible to make an improvement. The last thing I'll just touch on, because I saw this about the corporate governance question, income, executive compensation falls under corporate governance. A few other things fall here. So the last thing I'll leave is, how is this corporate power checked? Sometimes companies can have different share classes. So we have this currently with Meta, Facebook. Not everybody has the voting power. So much of it falls into one person's hands, Mark Zuckerberg. So that's a terrible company when it comes to corporate governance. It also may be having some negative social repercussions with its products like Instagram on teenagers. But corporate power can be checked by forcing transparency upon them, getting reporting mandates. We just had this happen. This is a sort of an E and a governance. I want to make sure that everybody knows that when you see things like the SEC just made a rule that companies now must disclose scope 1 and 2 emissions, that's an E and a G, really exciting. Kathy, next slide, please. And I'll be handing off to Todd shortly. One question that comes up all the time, and I saw it earlier about performance. I just want to share that the short answer is you can perform if you're an investor choosing to be socially responsible. If you want to put your money into sustainable investments, there is an index that goes back to 1990. It was originally called the Domini Social Index. It was later acquired by the data provider MSCI. The name was changed to the KLD 400 Social Index. It's not exactly like the S&P 500 because, well, 400 versus 500, but it is a broad market index. And you can see on this chart, at the very least, it tracks pretty well with the broad market. If you really want to get into it, it's actually outperformed on a risk-adjusted basis for over 30 years, which is something to be very proud of. And then the last slide for me is how might we do this? So I just want to share this piece because this is important before handing to Todd. A mutual fund company could choose to exclude investments. Why you might do this is, first of all, you just don't want to own private prisons or fossil fuels, let's say. But another reason you might do it is you may have a religious value that you seek to pursue. So you wouldn't own, let's say, gambling stocks or other sin stocks. And so using ESG data helps you exclude if that's how you want to do it. Other professional investors would say, hey, what we can do is actually try to own more of the companies that are doing the best across ESG, or we try to own companies to tell them where they're lacking so that they improve that, and that's better for society. And then lastly, you can do it, and I said this at the top, in almost any sort of investment these days, which is a real change in the last 30 years. So with that, I'm going to hand over to Todd, who's going to dive into real specifics, and I'll be around for Q&A later.
Thank you, Michael. I think that was a wonderful introduction to why social investing matters, how it's growing, and the kinds of impacts it's having in the world. So I'm going to talk a little bit about the options that are available and how everybody can get invested in social investing options right now. Next slide. So to be a social investor is not terribly different in a lot of ways from just being an investor in general. Because you need to, set your goals, whether you're setting a goal of retirement and investing for that, or you're investing for a college fund for yourself or for kids. Your risk tolerance, if the market falls by 20%, how much are you going to be nervous about that? And how much do you want to have in the market? So you know that about yourself, and figuring out how much you can put aside each month. You're just starting out in your 20s, and maybe you can only put aside $50 a month, but that's going to really add up over time and help with your retirement. So figuring that out too. The other piece about social investing, though, is that you're layering onto this whole your values, basically. What kind of world do you want to see, and what kind of investments do you want to make that are going to help you invest in that world? So the first way you can do that is by purchasing individual stocks. So this is one of the most direct ways that you can be a social investor. It's gotten a lot easier to buy individual stocks than in the past. It's the best way to control which companies you hold. I know some people were like, I don't want to pull out of ExxonMobil and then just put the money into Meta and be investing in social media and in the surveillance economy and so forth. And that totally is understandable. Obviously, if you're doing direct investment in stocks, you completely control which companies you hold. You can also own fractional shares these days. There are multiple platforms where you can buy pieces of a share of companies and create a diversified portfolio that way. It's also gotten a lot easier to be a social investor and directly hold shares. There's a lot of resources out there because companies are doing greater disclosures, and because NGOs are then taking that data and using it to rate companies on a variety of metrics such as racial justice, climate, human rights. You can do a lot of research for free that will tell you which companies are leaders and laggards in their industries, and that can help guide your decision making. The second thing is when you have shares in companies, you can then be an active shareholder with the shares that you hold. And Green America really encourages everybody who directly owns shares in companies to vote those shares every year. You're going to receive proxy ballots. They look really long and confusing, but we encourage people to really look at some of the resources that are out there, including As You Sow's proxy preview they put out each year, which highlights all the best and most important social and environmental resolutions at companies each year and gives you a sense of how to vote your shares. And Green America also has a free resource every year on our website, helping people know which are the key social issues they need to be voting that year. So we really encourage people to do that. It's gotten a lot easier. You can vote your shares online. I do it. It only takes about 5 minutes. There's also a new app from a company called Iconic that can help you vote your shares really easily. It all feeds into the app. You push a few buttons and you voted all of your shares. Very easy these days. So we really encourage people to use your ownership that way. Next slide. If you're not interested in holding shares directly, it's just too much research and too much work for you. That's a lot of people. You can certainly own mutual funds or ETFs. And those are really wonderful because they take hundreds of companies and you're owning shares in those various companies. It's easiest to create a balanced portfolio that way in terms of, large cap, domestic funds, small cap, international funds. There are SRI mutual funds and ETFs that span an entire range of anything you would want to invest in, including if you really wanted to investment just in clean tech or clean energy, there are ETFs that are dedicated to that. It's gotten a lot easier to do a completely diversified portfolio this way. And another thing about this is you can do research on these mutual funds. So it's gotten a lot easier using these tools like As You Sows, Invest Your Values, Natural Investments Heart Ratings, USSIF has listings on its website. And you can also do research not only on the sustainability ratings of funds, but also on the performance of funds on Morningstar's website as well. So it's very easy to figure out which funds are right for you and to put investments into those funds these days. And there's both active and passive funds. So you can have an actively managed fund, or you can just do index funds, and those have lower fees. Another way that folks are getting involved in SRI or social investing is through their retirement accounts. So at work, you're looking at things like employer-sponsored plans. So you can take part in a 401k and a 403b. The advantages there are that you have a high contribution limit each year. You can put $23,000 in a year. The downside is your employer is managing the funds. So there could be a very limited pool of ESG funds that are available to you, or even no ESG funds available to you. And we'll talk a little bit about that later when that happens. The other way you can invest for your retirement through retirement accounts is through IRAs. So this is perfect for people who are self-employed, obviously, doing traditional or Roth IRA. And you can put aside money each year, and that can be tax exempt as well. The downside to this is that their limits are much lower on IRAs. The upside is you can choose anything you want to invest in. So there's literally thousands of SRI options you can invest in through an IRA. And if you've maxed out on your employer account, you can also potentially invest in an IRA, either a traditional or Roth IRA on top of that. So those are options for you as well. Next. And as I mentioned, not all employers have the option of putting money into SRI funds in their 401k plans. As a matter of fact, only about 5% do. And so if that's your situation, if you're working for an employer and they don't have those options available, there are steps you can take, and Green America and Social K have partnered together on a guide to help your employer actually adopt SRI options into the 401k plan. Next slide. And I won't go through all the steps individually. You can look online at our guide. But basically, the key thing here is to find other employees who feel like you do, that there should be SRI options available in the 401k plan. Band together, do your research, demonstrate that it actually helps with employee retention. Employees feel more positive about companies when they have SRI options in their portfolio. It helps employees diversify their holdings and helps them plan for their retirement. And then you go to HR and talk to them and work with them to try and adopt SRI options. And a number of employees have managed to succeed at this. Next. So once you have money in things like mutual funds or stocks directly, Another thing you can do to advance your values in the world is with your cash holdings. So this could be your banking, it could be your checking accounts, savings accounts, CDs, anything that goes into a bank is a way for you to have a huge impact in the world. Because if you're currently banking with one of those large mega banks like Citibank or Chase, a lot of your money is then getting invested into the fossil fuel economy. But if instead you take that money out and you move it into a community investing institution, such as a community development bank or credit union, you're actually shifting your money in a direction that's going to help small businesses start up, small green businesses across the country, helping to fund affordable housing, helping to fund entrepreneurs, first-time home buyers, all the kind of things you really want to do with your money. And it's gotten easier and easier to find those. Green America has a resource on our website. We have a bank map that lists hundreds of options with thousands of branches around the country. And there's some other options out there as well for finding these kinds of banks. And the other thing you can do beyond that is in terms of cash options is there's things like loan funds and other investment vehicles where you invest and they have a really high impact. Those vehicles just aren't insured. So that's the only difference between those and a bank is you don't have the $250,000 of insurance. One of the leaders here is Calvert Impact. Their investment notes have a minimum investment of $25, and they do really innovative things in the United States and around the world to support communities. Another option here is Connecticut Green Liberty Bonds and Notes. Green America helped work with the state of Connecticut to issue these green bonds and notes, which have a much lower entry point than most bonds, and down to $100 for the notes, actually. And all that money goes towards creating more energy efficiency and renewable energy resources in the state of Connecticut. Next. And if you're not quite sure where to start, and you also want some help maybe planning your investment goals, we do recommend you could look into finding a financial advisor. A financial advisor can help you create your investment portfolio. They can help you figure out if you're investing enough money for retirement and the kind of retirement that you want. And if you work with a socially responsible investment advisor, that person can help you make sure that your money is invested with your values, and they can help steer you to mutual funds, stock holdings, community investment options that are right for you. So you can find those advisors in Green America's own Green Business Network. We have a number of advisors there on our website. You can also find them at US Social Investment Forum, has a member directory there. And what you want to really look for is somebody who has strong experience with sustainable investing. This isn't new to them, and this is probably core to their practice, and many of their clients actually are sustainable investors themselves. You want to make sure that they're going to give you a questionnaire to find out what your values are. And do they have model portfolios? Are they members of trade associations like USSAF? And are they certified as a chartered socially responsible investing counselor? So these are the best people to work with because they'll help steer your money in the right direction. And you can also find folks who will work with you hourly and help you decide how to steer your money, and you go and invest it yourself, or you can actually have them invest your money for you. It's your call. Next. So with that, I think it's time for us to all come back online so we can answer questions. I know there've been a number of really interesting questions in the chat, some of which have been answered in the chat and some of which we tried to answer in the presentations. But let's hear more questions. Go ahead and put those into the chat. And Kathy, do we have some that we should be answering from the chat?
Yes, we have some really good questions. I did want to start with one that was asked early on and get a couple more comments on it. What are your comments and ideas on the backlash against ESG investments?
Yeah, well, that's a really great question. I think Michael touched on this, and I know Kathy, you're working on this as well. I think the backlash is happening because of success, really. The ESG movement, the JEDI movement, DEI movement in the United States, we were seeing progress and success because we were seeing more and more corporations actually moving in a direction of being transparent, of being, taking account of the climate crisis and actually moving their investments in a direction to align with addressing the climate crisis, of adopting DEI policies and practices in their corporations because it's the right thing to do and because it strengthens the company and strengthens their returns over time. And I think this terrified a number of folks. It terrified the fossil fuel industry because they see that money is coming out of the fossil fuel industry, that there's greater investment going into clean energy, and that's terrifying to them. And it's terrifying to the Christian right because they don't want to see a world of gender diversity and equality. That's not their vision for the world, and they're fighting back as hard as they can. And they're fighting back by trying to stop people from having the right to actually invest their money in line with their values. And also the things that they're doing are actually undermining returns. So to the extent that they win, what they're doing is actually harming people in states where states are pulling out of ESG investments. Turn it over to Michael and others.
Sorry, I was muted. I'll add on to that for sure it was driven by concerns and in particular funded. A lot of this effort has been funded by fossil fuel interests. Certainly those anti-ESG hearings last year. I'll say that from US's perspective, we are busy on the Hill regularly. We talk to policymakers at the Department of Labor and the SEC. And on the whole, it was a lot of ineffective hot air. They didn't succeed at making ESG a scary acronym, at least on a federal level. But we have seen some state level things happen that are truly negative, and there are people trying to push back. I saw a comment from a Nan about Texas, and very tough state, and some very odd decisions have been made. I will say what we have seen for there are lots of people filing lawsuits and trying their best to fight on a state level, but we've seen some really strange actions in the state of Florida. Insurance companies are stopping underwriting new home ownership for home insurance because of climate change. And the state actually is banning funds that use ES or G data or use the words climate change in any part of their considerations from being held. The state treasurer basically kicked them out. So we saw bonds that they were forced to sell, and they actually took a loss as a state. They lost hundreds of millions of dollars of taxpayer money by choosing to get out. Texas saw that, has made some similarly bad choices, but thankfully not quite as bad. I will say we've seen some interesting things from state bankers associations who are typically more right politically. In Montana, one of the real leaders, at least rhetorically, in the House of Representatives that was pushing for the banning of the use of ESG data was quietly notified by the Bankers Association that would really hurt their work since they underwrite a lot of things and are under constant threat of wildfire and water law issues that are directly correlated to ESG data. And so they quietly made some things very, non-binding, and it was all just wordplay. But nonetheless, it really is sad that this is happening because ultimately, while we all may have values we're pursuing, the ESG data itself is just data. It has no intention. In fact, if you wanted to build a fund that was nothing but vice and fossil fuels, you would still need the data to figure out who that is so that you could create that fund. So the banning of it is very odd. I don't think it'll have a lot of leg here. I'm sure people will bring it up because it's a big election year, but it didn't seem to have that much effect. But there are a few states. If you find yourself in Missouri at the moment, I will tell you that if you work with a financial advisor, they have made it much harder for your financial advisor to do business with funds like Green Century, for example, which I saw get listed. Now they're going to ask you to sign, after all of your account paperwork, another document says you're aware that you're investing in funds that are considering socially responsible values or are using ESG data. So I think it'll be short-lived, but it is our current reality, and hopefully it goes away.
Mhm. Okay, another question concerns young people. Many young people are saddled with student loan debt. They face an uncertain job market and skyrocketing housing costs. So they may feel, I don't have any money to invest. What money do I invest? Um, how do we get young people to get started investing even just a little bit?
I think one of the things that can help is if you work for an employer that has a match, and if there's just a small minimum investment to unlock the match from your employer. So if nothing else, you don't want to lose out on that benefit from your employer to receive their investment into your retirement fund. So just do as much as you can, even if it's little, and try and get something from your employer that way. The other thing is to, there are a number of resources out there for working to restructure student debt and bring down those debt payments. And there are government resources and there are private resources for that. So those are available now, and a number of people are actually seeing ways to cut back on the student loan debt at least. But it is a tough world for people in their 20s and 30s with skyrocketing housing costs in particular. As a country, we need to build far more housing. That's really the solution there. Other folks?
Yeah, I'll just reiterate your point. If you have a job where one of your benefits is a retirement plan, at the very least, make some contributions there because that's pre-tax dollars. I definitely understand that there's maybe less free cash flow with extras, but one great thing that has occurred over the past 10 years is huge advancements in financial technology. I wouldn't want you to speculate, but there are things like, we've seen with the Robinhood app, you can put $10 to work. And you can get into mutual funds or ETFs that are choosing to use ESG data for their mission. So accessibility is lower and possible now. You can even get into Calvert notes for as little as $25. So it's possible to do it. I know it's not easy, but if there's a benefit, financial technology has lowered the minimum levels of investment required now.
Anyone else want to jump in on this one?
I'll jump in just quickly as a young person. I agree with Todd, is that like a lot of our first experience with investments, retirement, any of these things is like at our first like a full-time job. Oftentimes, growing up like in school, you don't, you're not taught that. There aren't classes on these sorts of things. And so you're just kind of thrown into it when you get this first full-time job out of college or what have you. And you really have to just like learn as you go. And it's hard to know. There's a lot of stuff that's going on. And so for the most part, you're trying to just get the gist of what's going on and make sure you're not making a mistake. And so some of these more complex things where it's like, oh, you have all these options and you might have to look into things yourself. I think this is a great point where this intergenerational part can come in, is if, hey, you're used to doing investments, you're used to messing with your 401k, you're used to all these different things. Are there young people like in your life you can talk to about that, or even like younger family members, children, grandchildren who might be going through and experiencing these things for the first time? It's a wonderful way to put your expertise and their values and care together.
Great. So another question, there's been a few questions sort of around this, but how do we know if a fund marketed as socially responsible or ESG is actually doing good and not greenwashing? For example, takes TIAA, which I personally hold from having worked at a university for several years before this, and all my money is in the social choice fund. And I was not real happy to find out there's oil and gas in that fund. So how do you know?
Todd touched on this a little bit with some of the tools that are out there, like the As You Sow tool, which is free. You can just put in the symbol of your mutual fund. But I do want to touch on like the word greenwashing, because this is important. Greenwashing would be if they told you they were fossil fuel free and then they owned fossil fuel companies. If it's a fund that just says it's an ESG fund, and you open it up and let's say it's TIAA and you see there are holdings you don't like, maybe they own a weapons manufacturer, maybe at a lower percentage than the S&P 500 index, but they still own it, or they own a fossil fuel company, again, maybe at a lower weighting, but it's still in there. that's not greenwashing. That's just green disappointing. So you do have to do your homework. They aren't lying. They aren't misrepresenting what they're doing. But you now have these tools, and as Todd gave you a few of them, and they're all linkable. Kathy's put them here in the chat, and they're also in the slides that you'll receive later. For free, you can plug in the mutual fund symbol of the funds in your, let's say, your retirement plan, and see what the exposures are. That As You Sow tool is one of my favorites. So you can uncover what you might not like. And if you don't have a lot of great options in that case, you can approach your benefits department or your HR person or the plan administrator and say, hey, I'd like to see some funds that are focused on sustainable investing, or ideally even exclude some of those types of holdings. But broadly speaking, greenwashing is a real thing, but it doesn't happen that often. But I talk to a lot of people who care, like most everybody here, who are mostly green disappointed. Funds could be better, and some fund companies do a better job than others. So you got to do your homework. Or if you have a financial advisor, make sure that they're doing their homework.
Mhm. Great. Okay, I'm just going to take a couple more quick questions and then we have to wrap up. We have there was a question here about are there any good strategies for keeping fees as low as possible?
Oh, generally speaking, index funds have lower fees, and ETF funds generally also have lower fees than actively managed socially responsible funds. So if you want to do one of the index fund products, you can do that. They're offered both by fund companies that specialize in SRI, but also larger companies that have SRI options as part of their portfolios. The only thing I would say is you do lose out. The active managed funds are the ones who then take your money and actually use it in a way to try and promote a better culture at the corporations they actually do invest in. So as folks were saying, like if you're in a fund that's divested from fossil fuels, but you're now invested in the tech sector, that might not feel great, except if you have an actively managed fund and you're paying for that. What they're doing is taking your investment dollars and saying to corporate management, we're concerned about things like social surveillance. We're concerned about the energy profile of AI technologies. We're concerned about the implications of AI technologies in general. And we want to use our shares to try and get your company to have a more responsible culture around those things. So that's the advantage, and you do pay a bit more for those active shares, but you are actually having a deeper impact in the world than a passively managed index fund, but which would actually save you some money.
That's right. And I, the only thing I'd add to that is you get what you pay for, right? So if you choose, if your primary objective is to have fees at as low as possible, you can buy funds that ETFs, index products that are almost zero in fees, but then you will own all these things that would cause some disappointment potentially if you're on this call. So there's a happy medium, and there's a way to balance it. You can choose some funds that have a little bit higher fee, that are active managers, like Todd mentioned, that are pursuing goals that you really want. Maybe you would own a Green Century fund so that you can support their work and fighting climate change and deforestation around the world as they engage corporations. And then you may have a couple of sectors where you say, okay, I am going to buy an ESG index, and I know I might be a little green disappointed, but that way I'm balancing out fees and activity.
All right, thank you all so much. So we are a little teeny bit past the top of the hour, so I'm going to go ahead and close us out with the final slide. Thank you to everyone for joining us in a very lively conversation in the chat. That was great to see. Together we can make a real difference in creating positive change for our planet and people on our planet. So here's some ways you can keep the momentum going. So we will follow up on tonight's webinar with an email that contains the links, a copy of the slides, and I believe an event recording. All of the links in green in these slides are clickable, so you will have all of those links to explore at your leisure. And then you can also take, USCIF has a 30-minute online individual investing course for beginners, and we'll put a link to that also in the slides. That's a great quick course to go over a lot of this information and a little bit more again. We have 3 more webinars in this series. So Better Banking webinar is Wednesday, April 3rd at the same time, 7 p.m. Eastern, 4 p.m. Pacific. Take Charge of Your Card, all about credit cards, is on a Thursday, April 25th at 7 or 4 p.m. And Responsible Insurance, that's a new area of our work, is Wednesday, May 15th at 7 Eastern, 4 p.m. Pacific. If you look at, you can find all of them listed at greenamerica.org/webinars. You can sign up for our email to stay informed about our campaigns, events, sustainability tips. Subscribe at greenamerica.org/sign-up. And follow us on social media. Green America is on Facebook, Twitter, LinkedIn, Instagram, and now also TikTok. So find us there. A lot of our stuff, we have a great social media manager and a lot of great stuff going out through social media. And finally, if you're so inclined, you can donate. Every contribution counts. So support.greenamerica.org /default.aspx. We will send you that link. You won't have to remember that. But that's a way to keep our work going. So all of our actions matter, and together we can build a more sustainable and just world. Thank you for your commitment to creating positive change. We look forward to seeing you at future events. In the meantime, stay connected and stay inspired. And have a great night. Thank you.
Thanks, everyone. Great to be with you. Take care.